Hey, what's up, my friend? So, welcome back to today's training video where I'll share with you, right, 4 steps to finding the best trading setups. And to do that, right, I want to introduce to you the TASE formula. TASE formula. Okay, so what does TASE stand for? Simple, right? Number 1, it stands for trading with the trend. And why trade with the trend? And it's simple, really, because when you trade with the trend, it increases, right, your potential profit. Let me just illustrate to you what I mean. So let's say this is an uptrend. Let me ask you, do you want to be buying or selling? You can see, on both sides of the coin, right? If you were to be buying, right, this is your potential profit potential. Yeah, this is your profit potential, right? From here, this portion here. And if you were to sell, your potential profit is probably just over here to here. So clearly, right, by staying on the right side of the trend, you have greater profit potential. And the gist of it is very simple. If you identify that the market is in an uptrend, then look for buying opportunities. If the market is in a downtrend, then look for selling opportunities. That's pretty much it. Okay, so a couple of examples. If you look at this chart, Aussie and this market is in a uptrend. So what you're going to do is to look for buying opportunities. And if you look at this one over here, pound Aussie, this market is in a downtrend and you want to look for selling opportunities, right? I didn't say sell immediately. I didn't say buy the moment the market is in an uptrend. We will talk about that later. But for now, I want you to be clear, right, on what you should be doing to buy or sell. Okay? So that's the first one. Trade with the trend. Number 2, identify your area of value. And in essence, right, this simply means, right, where might potential buying pressure step in, right? Especially if, let's say, if you are in an uptrend, you don't want to buy just because the market is in an uptrend, right? You want to wait for the price to come to an area of value because the market could be in an uptrend and it could be overextended, ready to make a pullback. And if you buy near the highs, right, you will likely get stopped out on a pullback or reversal. So this is why we want to identify the area of value. We want to ask ourselves, right, where might potential buying pressure come in? And if it's an uptrend, it might come to, area of support, might be a moving average, might be a trend line, etc. So these are some of a few common concepts, right, to identify your area of value. So let me just share with you a few examples. So if you look at this stock over here, Doku, right, where is the area of value? So from what I'm seeing over here, Doku, this is DocuSign, a very popular tool, right, to get your signing of documents online. So what you can do is you identify your area of value. What I'm seeing is over here, right, this area of support in this uptrend. Right, yes, this market is in an uptrend, and identify this area of value here because the market has tested once, twice, 3 times, and possibly, right, on the 4th attempt over here in an uptrend. So this area of support, right, is an area of value. Another one, how about this? All right, euro dollar. So if you look at this, right, historically, you can see that this market, right, area of value don't necessarily just have to be support resistance. It also can be in the form of a moving average. In this case, right, notice that how it, tested the moving average a few times over here, historically. Okay, a few times here, I think here, almost once here, then here, and here, then massive spike through, then another time, and that's my point, right? Your area of value can be defined, right, using different concepts. So the popular ones that I like to use is support resistance, moving average, trend lines. Okay, so this is how you identify your area of value. And that's the second thing. Moving on, the third thing, right? You want to look for stack area. So what do I mean by this? All right, so we are now applying a concept on top of another concept. So earlier we discussed about area of value, finding out where my potential buying pressure step in. So we also want to find out, right, that whether that area of value, does it coincide with a higher time frame area of value? Why is that? Because that increases, right, the probability of your trading success, right? It's very simple, right? Just imagine this. If you are going after a girl, right, you're interested in her, how do you know if she's interested in you? Well, if you text her, you WhatsApp her, you message her, and she doesn't reply you, or she give you 1-2 word answers, that's pretty much a goner, right? You just cut your loss and move on. But on the other hand, if the female, right, that you are texting, that you're messaging, you realize that she replies back, almost instantaneously, very quickly, right? And you give her 2 lines, she give you back 5 lines, right? When you ask her out on a date, right, she says she's willing to come to your place and pick you up and send you to the restaurant or whatsoever. And when she twirls her hair, I have no hair to twirl, but if she twirls her hair when she talks to you, it's good signs, right, that she's probably interested in you. And it's the same as trading. When you have multiple factors, some people call it confluence, coming together, that kind of increase the odds of the trade working out. Understand where I'm coming from? Okay, so what we are looking for in the stack area of value is that we want to make sure that the area of value that we have identified earlier on our trading time frame, that area also coincides with a higher time frame area of value. So let me explain. So one example is this. So if you look at this over here, okay, I'm just gonna do a quick split of the charts. Ka-ching! Okay, so over here, this is the daily time frame. Then here is the 4-hour time frame. Okay, so let me just orientate you a little bit. So if you look over here, this is the daily time frame, and this is the 4-hour. Okay, so you can see that over here on the daily time frame, we have this area of value where the price respects the 20 MA tested once, twice, and a third time over here. So you can see that the 20 MA serves as an area of value on this daily time frame. And when you go down to the 4-hour time frame, you look at this chart over here, you'll notice that this market has come into this area of value as well, this area of support. So you can see that over here, this is an area of value on the 4-hour time frame, and this area of value coincides with this higher time frame area of value, which is the 20 MA over here. Okay, so this, right, is what I mean by stack area of value, right? So area of value on the trading time frame, let's say your trading time frame is the 4-hour time frame, coincides with a higher time frame area of value, and in this case the daily time frame, right? This one here is the daily time frame, right? 20 MA. So your area of value doesn't mean that a support must, be a support on a higher time frame. That's not true, because as I've mentioned earlier, there are different ways to define area of value. Could be support, could be trend line, could be moving average, and stuff like that. Okay, so this is one example. Let me share with you another example, right, to see the area of value in action. So over here, this is the daily time frame. Okay, so let me just make the charts bigger. So this is NASDAQ. You see over here again. Let me just pull out the two charts again. Okay, so this is NASDAQ. This is the daily time frame on NASDAQ. Okay, pull out the 20 MA. And over here, let's make it the 4-hour time frame. Okay, so over here, same thing. Notice here, we have this area of value on the NASDAQ time frame, price respecting the 20 MA. At this point over here, this is the higher time frame area of value. And when you go down to your trading time frame, which is the 4-hour time frame, this is an area of value as well. This price over here has retested this area of support over here, right? And this area of support, right, coincides with this higher time frame area of value, this 20 MA on the daily time frame. Can you see where I'm coming from? Right, so this is the 4-hour time frame, and this is the daily time frame. This area of value on the 4-hour time frame coincides with the area of value that you see over here on the daily time frame, which is a area of value using the 20 MA. Okay, so this is what I mean by stack areas, right? This is what we are looking for, stack area, right? This puts the odds, right, in your favor. Next one. And by the way, if you're enjoying this video, hit the thumbs up button, and if you don't, right, then just subscribe to the channel. Sounds good, right? So number 4, entry trigger. So once we have identified our, our trending market, the area of value, the stack area of value, the next thing we want is the entry trigger. What is the signal, right, to tell us that, hey, it's time to enter the trade? And one way to do it is that, you want to look for price rejection. So what is price rejection? It's a very simple concept. You basically want to see price come into your area of value and then leaving it quickly. This tells you that there is price rejection. If the price comes into support and quickly, right, bounce or reverse away from support, this tells you, right, there are people, buying at this area of support. That's why the price got rejected. So if you are familiar with candlestick patterns, right, this could be things like, the hammer, the bullish engulfing pattern, and for bearish one, it would be the shooting star, bearish engulfing pattern, etc. So, but the key thing is basically you want to see the price come into your area of value and then leaving quickly, right? The faster it leaves, right, the better. So let's have I don't think we need examples for this. I mean, this one is pretty much straightforward. So let's have a look at a few charting examples, right, to illustrate today's concept, right? The TASE concept, right? Trend. Let me just recap, right? The TASE concept. Trend, area of value, stack area of value, and entry trigger. So the one thing to mention is that the stack area of value basically is that you want your area of value on the entry time frame, on your trading time frame, to coincide with a higher time frame area of value. Okay, so let's have a look at a few examples. So I think you've seen some earlier, right? We mentioned earlier is the Aussie Canadian one. You saw that earlier. Okay, so this is the daily time frame. This is the 4-hour time frame. You've seen that on this daily time frame, or rather, let's talk about the trading time frame first. The 4-hour time frame over here. Okay, we have this area of value, which is an area of support, and this could be an entry trigger. Price come into support and bounce off, pretty quickly. And if you realize, right, this support is no ordinary support because it is at this area of value on the higher time frame, the daily time frame at the 20 MA as well. So this is the TASE concept in action, right? We are trading with the trend. This one here, we are trading with the trend. We are trading at this area of value. Okay, this area of value has stacked on this higher time frame area of value as well. And then we have this entry trigger, right? This is a big bullish candle closing back above support. Next one, NASDAQ. Okay, so this example, we have also seen it earlier, but just, walk you through it. So NASDAQ, again, this is the daily time frame. Okay, let me just walk you through. This is, let's say the 4-hour time frame is your trading time frame. This is the area of value, right? And over here, we have the price coming into this area of value and then getting rejected pretty quickly. But as you've seen, right, this area of value is no ordinary area of value because this area of value coincides with this area of value on the daily time frame as well, the 20 MA, right? Tested a number of times previously. So you can see that this level is a significant level because it has stacked right on top of the higher time frame area of value. Right, let's look at another example, the euro against the Swiss franc. This one here, I believe, is the daily time frame, okay? And this one, I want to be the weekly. So let's have a look at the daily time frame first, right? If you look at the euro against the Swiss franc, okay, let's see. Okay, so this one over here, we can see that this market has come into this area of value. Let me just use a tool to draw it. This area of value, right, where previous resistance, right, could become support. Over here, market is in a downtrend, came into this area of value where previous resistance could become support. So is there a stacked area of value? And the answer is yes, right? If you go up to the weekly time frame, you would see, right, that this market, right, coincides with this downward trend line as well, about here. Okay, so you just pull this out and make this like, like a channel, or rather an area on the chart. You realize that this area of value, right, on this one is the daily time frame. You see earlier, the daily time frame. This area of value, right, coincides, right, with this downward trend line, right, over here, which you've drawn on the weekly time frame, which you can be seen, right? So again, right, you have the confluence of this resistance here and this downward trend line here, okay? And then now price rejection, right, will be in the form of this candle, right? Price came into this level and then got rejected strongly, closing, right, near the lows of the day, right? So this is again, right, the TASE formula in action. And just one more example before we kind of, sum up today's training. A pretty short one, right? But hopefully you get the idea of what I'm trying to share over here. So let's say on the, it could be the 4 or 8 hour time frame, right? Let me just zoom this one here. Okay, so you can see that on the 4 hour time frame, or was it the 8? Okay, I can't really find an example on this chart, so we'll just move back to the slides. Okay, so let me share with you a few bonus tips before we sum up today's training. Okay. Number one, right, the stack area combos, right, as I've said, right, you can use different area of value and stack them together. For example, support and moving average. So this is the examples that you've seen earlier. The trading time frame is at an area of support, and on the higher time frame is at a moving average. Alternatively, it could be a support and trading time frame at support, and higher time frame it comes into a higher time frame trend line. Or it could be support on top of support, meaning let's say it came into a trading time frame area of support, and that area of support, right, happens to be a higher time frame area of support as well. That could work as well. Okay, so these are certain combos that personally I like to trade off, right? Whether it's support and moving average, support and trend line, etc. And the next tip that I have for you is that you want to buy the strongest and short the weakest. So what I mean by this is that, let's say for example the stock markets, right? Based on my research and my own backtesting, right, I find that stocks, right, and also, right, based on academic research, right, stocks that have moved the most in price, let's say over the last 50 weeks, right, these are the stocks that tend to outperform the market. Okay, so how can you use this in your trading? So very simple. Let's say you have two similar trading setup, or two potential trading setup. One, let's say, looks like this. Okay, maybe comes back, retests this area of support. This is the first setup, and then you have another setup that might look like this. Okay, comes up here, breaks out, and do a deeper retest of previous resistance that could become support. So in this case, which setup do you want to trade? Do you want to buy this one over here where previous resistance could become support, or do you want to buy this one here where the price retest support? So one way to go about it is just to measure, right, these two stocks, for example, whether you're trading stocks or FX, measure their rate of change. Measure how much they have increased in price over the last 50 weeks. Let's say this particular stock has increased 50% over the last 50 weeks. And this stock has only increased, let's say, 20% over the last 50 weeks. Then clearly, you want to be looking to buy this particular stock because it has moved more in price, right, over the last 50 weeks that you have, look at. Okay, so this is what I mean by buy the strongest, short the weakest. You always want to be buying the strongest markets because these are the ones, right? These are the markets, right, that tend to move more in your favor if the market goes in your favor. Likewise, right, if you short the weakest, these are the markets that tend to drop the most, right, if the market does, collapse. Okay, so these are a couple of tips to share with you, right? Can be applied to currencies, can be applied to stocks. But one thing to share is that for stocks, right, I usually don't short because in the long run, the stock market is in an uptrend, right? But for currencies, it's fine. Okay, so a quick recap. Number one, the TACE formula is trend, trading the direction of the trend, identifying the area of value, identify the stack area of value, meaning your trading time frame, the area of value coincides with a higher time frame area of value as well. And then we mentioned the different combos that you can use, and then the entry trigger. What we are looking for is price rejection, basically price coming quickly into an area and then getting rejected by it. Sounds good, right? So with that said, right, if you've enjoyed today's training and you want to learn more about such trading tips and tricks, right, what you can do is go down to my website over here, tradingwithrayner.com, and I recommend, right, getting this this guide over here, the ultimate guide to price action trading. We will talk more about how you can use support, resistance, market structure, and stuff like that, right, to help you better time your entries, exits, and all the fun stuff. Okay, so this guide is completely free. Just click this orange button and I'll send it to your email for free. So with that said, I wish you good luck and good trading. I will talk to you soon.